IRR is your prime parameter for the purpose of taking decisions about your capital expenditure. So, XIRR, as I would also tend to think, must be because nowadays nobody calculates IRR manually, because calculating IRR manually, as I mentioned little while ago, is going to be a huge challenge and time consuming process. And you will still not be very confident about the preciseness of the IRR that you will calculate manually. So therefore, maybe since it is being used, it is being calculated using the Excel, and that's why they may be calling it as XIRR. But as I would think, as a finance person, it's really difficult to build any variation of IRR, because if you create a variation to IRR, you're really playing with a very prime parameter which is used globally for the purpose of decision making on the capital expenditure. So even if the mutual fund is using X IRR while giving you while letting you know as to what is the return that you have got, so it's I'm sure it's same thing. I mean, the only thing they're calling it as XIRR, but ultimately what they're telling you is IRR. So they're letting you know that this is the IRR that we have earned on your investment. You can compare, whatever your expected rate of return maybe, and then come to a judgment as to whether this mutual fund has met your return expectation or not. And that is how it should be.
Okay, thank
Yeah.
you.